Hey, it's Clay Trader, and this will be a video chart on ticker symbol PLUG. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like a few weeks worth of time, it's actually just the past few days broken down into 30-minute time slices. I've been doing this analysis on a pretty routine basis. That's where these red and green line annotations are coming from. And just want to keep the chart updated as we, have another day now in the books. And not a huge day, especially if you're, defining huge day as something like that, but a good healthy day. And I have one little nitpick, and I'll get to that in a second. But overall, though, from a big picture perspective, everything is still perfectly fine. The main reason for saying that, and my main kind of justification for saying that, is the price is still above both of the long-term moving averages, the pink line being the 200-period simple moving average, purple line being the 50-period simple moving average. And when the price is above those, even if you have just a surface deep understanding of charts, you know that, all right, that's a good sign from the bullish perspective when prices are above longer-term moving averages. Now, my one little nitpick here that happened was the price actually did a great job of breaking up above this level of resistance that I talked about in yesterday's video. And that level sits right around the $1.12, $1.11 area. And it was up above there, late afternoon, and it was doing a good job of staying above it. And then the final 30 minutes showed up, and again, represented by this candle. And you can see that the price ultimately closed back below it. So therefore, this has still got to be considered an area of resistance. Like I said, a little nitpick. Just because this happens, am I saying that everything's totally ruined and this thing's headed down to 20 cents tomorrow? I'm not saying that at all. Just a little nitpick of, the price, or the chart would have looked a little bit better had the price been able to close up above that red line. It didn't, but again, not the end of the world or anything like that. So $1.12, $1.11, right around that area, still the kind of stubborn area of resistance. If the price can push through there, the next key level up around the $1.23 level, which I talked about in a video a couple days ago. But again, before you talk about $1.23, first got to get up above that $1.12 area. Supports already talked about. The ideal levels that you want to see is the price just stay above the longer term moving averages, which so far so good. The bulls have done a great job of that. If the price cannot hold above those, then that's where 95 cents becomes the must hold level. All in all, though, not a huge day, but by no means a terrible day either. So we'll see if the bulls can continue to build upon and get this uptrend continued. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.